Hello, Business 330, Business Finance. This is Professor Hasse. It's Monday, July 13th, and this is our week number 6 introduction video for our Business Finance class for our class tomorrow night, July 14th at 6 o'clock. One major event you are working on right now is making sure you complete your assignment number 2 and post to Blackboard this evening. And then tomorrow in class we will talk about capital budgeting analysis, all going towards our California Best Trucks case, which is due the last August 16th, the last week of our class, and that'll be posted to Blackboard tomorrow, and we'll review that in class. There's no other graded work this week, just maybe perhaps review that California Best Trucks case, and then we'll talk about it every week for the remaining of our term. Another topic this week is the economy. This is the earnings season of quarter number 2. In other words, companies are disclosing their financial results of the second quarter of this year, and most people seem to think it's going to be a disaster. This naturally will affect your portfolios. So let's watch a quick video about earnings season this week.
Earnings season is going to be the next big hurdle that this market has to jump. Q2 earnings estimates are on track for their biggest decline since fourth quarter of 2008. And it's going to be the second straight quarter of declines that we're going to see. Let's bring in a couple of investors on this. David Katz, Chief Investment Officer with Matrix Asset Advisors, and Dan Suzuki is Deputy Chief Investment Officer with Richard Bernstein Advisors. Good to see you both. Thanks for joining us today. Dan, what are your expectations? I mean, are we going to see any positives come out of this season of earnings or not, do you think?
Well, it depends on what you're looking at, Bill. I think if you're looking at the numbers that these companies are reporting, you're not going to see any positives. I mean, we all know, having looked at all the other data out there, that the second quarter earnings season was probably miserable. But it's a bit backward looking to focus on that number. So I think where the positives are going to come from are companies telling you that things were miserable, but that things are on the upswing right now. So I think what's less important for me is the numbers that they post, but I'm curious to hear how they're going to balance, sort of the focus on preserving cash and cost cutting and profitability in 2020 versus investing for growth in 2021. If they're more focused on the former, then I think that's actually more of a negative for overall S&P earnings as a whole. But if they're more focused on the long term and growth and preserving their employees and spending on growth, I think that's a little bit more bullish of a growth signal.
David, what about you from the value standpoint? What's the theme that you're looking for this earnings season?
Well, we agree with Dan. We're expecting a fairly miserable earnings season, but it's critically important to put it in perspective. Last quarter's earnings were poor, yet you had a great stock market. We think the market is going to focus less on this quarter's earnings season and more about what companies talk about for the balance of the year. Are their balance sheets good, and are they seeing demand pick up? We think the market then starts to look toward 2021, and that should allow for a pretty reasonable stock market. So we're not expecting the current quarter to be particularly good or bad in terms of moving the market. The actual earnings will be poor, with certain sectors being worse and a few sectors being outliers like consumer staples.
I think we're all in agreement that the backward-looking numbers aren't very helpful. It's the forward guidance. But Dan, how confident are you going to be that companies are actually able to give guidance, particularly towards the third quarter? I mean, we're at a critical juncture. We're at the end of July. The extra stimulus checks to consumers comes to an end unless another fiscal policy round kicks in. I mean, there are things that are just sort of still unknown about how it'll impact consumer behavior, and so therefore demand, we could have seen that pick up, but we don't know what it's going to be in August or September.
Exactly. If you're going into this earnings season hoping for a lot of visibility and color from company guidance, I think that's a bit hopeful in my perspective. I think that what you saw last quarter is that everybody cut their guidance because of all those uncertainties. And to your point, what you were just mentioning, a lot of those uncertainties haven't gone away. In fact, to what you were saying, there's probably even more uncertainty coming on the horizon from here. So I think that for that very reason, you're probably going to see the number of companies issuing guidance continue to be very low. And so it's very much about What have companies told you about the trends over the last 4 weeks, and how are they reacting? Are you going to see wholesale cuts in advertising budgets and more layoffs and more cuts to capex and technology spending? Because if that's the case, there's a lot of companies that are going to get impacted by that.
Okay, the earnings season, a very important time for corporate finance, 4 times a year at the end of every quarter. We'll be discussing this in class as well. But again, assignment number 2 is your priority. We're going to be discussing chapters 8, 9, which we did last week, and 10 and 11 this week, and doing an in-class sample spreadsheet. So have a good rest of the day, everybody. I look forward to seeing you tomorrow night at 6 o'clock. Adios.